Has the coronavirus pandemic made it hard for you to pay your mortgage? Mortgage forbearance lets you hit pause while you get back on your feet. Take these 5 steps to get help today. Step 1. Find the contact information for your servicer. That's the company you pay your mortgage payments to. The best place to look is on your most recent mortgage statement. Step 2. Call your servicer. Tell them you're experiencing financial hardship because of the coronavirus pandemic. Tip: calling the number on your statement can help you avoid scams. Step 3. Ask if you're eligible for protections under the CARES Act. The CARES Act helps people who are experiencing a financial hardship due to the coronavirus pandemic and have a federally backed mortgage. If you have a privately owned loan, many servicers still offer forbearance or other relief programs. Step 4. Ask what happens when your forbearance period ends. Your servicer may not be able to give you all the details up front, but it's good to get an idea of what to expect. Some questions you should ask are: what happens to the payments I miss? What are my repayment options? When will repayment be due? And are there any fees? When you get closer to repayment, you'll work with them on a specific plan. That's when you'll want to make sure you feel comfortable with the terms on how you'll repay. Step 5. After all of your questions are answered, ask your servicer to provide you the agreement in writing and check it over to make sure it matches what you discussed. And don't wait. Forbearance is not automatic. You must request it. If you know you won't be able to make your monthly mortgage payments, contact your mortgage servicer immediately. And remember the 5 simple steps. Step 1. Find your mortgage statement with your account number and your servicer's contact information. Step 2. Contact your servicer and tell them you've experienced a financial hardship due to the pandemic. Step 3. Ask if you're protected under the CARES Act. Step 4. Ask questions about relief programs that are available, including forbearance, and how you'll repay any paused or missed payments. Step 5. Get it in writing and agree. For more detailed information or to find a local housing counselor who can offer free expert advice and guide you through your options, visit consumerfinance.gov/housing.
Hey folks, Dan Frio here, the rate update. Today we're talking nothing but forbearance. Okay, what it is, and depending on what program or loan you have, what an exit strategy might be. So you probably learned a lot from the video that you just watched. So let's break down each component of this. So your options are normally, you pay a lump sum to bring yourself current. You can divide what you owe by 6 or 12, add that to your current payments, and then after that duration of time, you'll be current. Or you can end it on the back of the loan, or you can modify your loan. There's a whole slew of ways that you can go about in your exit strategy of this. But the one I want to talk about today is based on what loan program you're in. If you're in a conventional loan, FHA, VA, USDA loans, what another option might be for you is this. I probably got in at least 8 to 10 applications today, and almost every person was at 4.5% to 5.25. So because the rate is that high, we're looking at possibly refinancing you the easiest way possible. So let's go through some ideas for you in this process. So again, you know what the forbearance is because you're in there now. And my goal is to teach you guys, or to at least expose you to the truth behind what your options are, possibly the refinance. Now, the reason why I'm saying this is I've been doing mortgages for over 33 years. And back in 2008, 9, 10, 11, there were millions of modifications. Most of those modifications put the lender in a very good position and was able to, I'll say, quasi help the homeowner. And here's what happened in a lot of those cases. Mr. or Mrs. homeowner, they're 6 months behind on their mortgage or a year behind on their mortgage. They finally get in touch with their lender, and their lender says, okay, let's modify your loan. So what they did with this is they modified the loan, took their current balance, okay, added all the other missed payments to that balance, so you have one big balance now, and they redid the note over a 40-year term at a higher rate. Well, what got through a lot of these is, when the homeowner was sold on this packet, your payment's going down. Cool. But you didn't realize, well, it's now added at least 10 years to your term, if not more, in most cases, almost all cases, more, and your rate is probably on average about 2% higher than where you were. Is that a good option? Maybe. But wonder if we could do kind of that, bring you back to a 30-year term, reduce your rate, bring down your payments, and then once things settle, go back to making maybe an additional $100 payment a month or so forth to get to drive down the term of the loan. In my case, for example, I hate to say it this way, I really don't care about the term of the loan. I want a payment that's affordable. I love my house. So, between the appreciation, the tax write-offs, and a bunch of other things, I see it as a much better position for me versus renting. So let's go through all these options that you'll have available to you in most cases. Okay, so what we're going to start talking about at the top is, and these are my guidelines. These are with us, preferred rate, and I am the Frio team. But conventional financing. So when you're in a forbearance agreement, let me go through this. As many borrowers that went into the forbearance have now aged out of the ability to pay in the forbearance, please see the below, as some borrowers did not exit forbearance and bring their loan current before going into loss mitigation situations, and they now must make 3 payments under the new loss mitigation stage. Okay, so there's different variations of when you're looking in the forbearance. You're reinstating your loan, which reinstatement means the loan was brought current in full, okay? Or you're a deferral. The loan is deferred if the borrower is not allowed to pay back the missing payment and missed payments were added back into the loan in some way or another. All right, so here's kind of how this works. If you reinstated your loan, if the borrower resolved missed payments through the reinstatement, they are eligible for a new mortgage loan. Okay, let's just keep it that way. Loss mitigation. If your outstanding payments will be or have been resolved through a loss mitigation solution, the borrower is eligible for a new mortgage if they have made at least 3 timely payments as of the note date for the new transaction has followed. Okay, so I'm going to just scroll down here just to explain these in simplest terms. So I had the underwriters go through and basically break this out for me to make it a little bit simpler. For borrowers in forbearance and not yet in some type of modification plan, whether the borrower entered in a forbearance plan but missed no payments or did miss payments, the loan is eligible for, with Fannie and Freddie if the payments are paid in full prior to the loan approval. No proceeds from a cash out loan or a rate and term loan may be used to bring the loan current. The loan must be brought current before the final approval. Okay? However, for borrowers in which the forbearance period ended and they are now under a loan modification or repayment plan, the borrower must make 3 payments under the new plan before they're eligible for new financing. The 3 payments cannot be paid at once. They must be over a 3-month period. So in most cases, people are going to qualify for this section right here. The forbearance is up, they're out of it. Your lender, either they adjusted your payments over a 6-month term, a 12-month term, or they threw it to the back end of your loan. So in any of those cases, what we need you to do is complete a 3-month pay period with your new mortgage. Okay, after 3 payments, we can refinance you. I would highly suggest we get started. Let's say you're coming to the conclusion of your forbearance. Let's say you started March of last year and now March of this year, it's over, March 30th of this year. Let's get you started now. Then you can make your April, May, and June payments and we'll close you in July. Most cases in July when we close you, you'll be able to skip your July and August payments. So you're going to get 2 additional missed payments or skip payments at that point. So that is the conventional way of doing loans, or how to refinance, or your exit strategy on a conventional loan that you're in a forbearance. That's one of the toughest areas that we see. So now I want to go over the FHA guidelines, and those have been revised. The easiest way to do this is credit qualifying streamline is an alternative for borrowers not meeting the above non-credit qualifying streamline provided borrowers. Made all the payments within the month due for the 6 months prior to the forbearance and had no late pays in the last 6 months. Well, you skipping your payments due to the forbearance agreement is not considered late payments, okay? Loans will need to be manually underwritten. So let me break this down for you. If you have an FHA loan, we can do a credit qualifying refinance for you, okay? And we can add in all of your past due interest and fees. But the only caveat behind this program is normally in a streamline, we don't need to get an appraisal, nor do we need to validate or prove your income. Well, in this new scenario, we do need to verify your income and make sure you qualify in the budgeting piece. Our terminology behind that is what we call a debt ratio. It's your monthly debts that show up on your credit report and or your mortgage and or maybe child support or so forth, divided by your gross monthly income, okay? And we'll walk you through that when you call us to make sure you qualify under those terms, okay? So that is the FHA guidelines behind that. Now let's go to the VA guidelines. So we'll scroll down. And the VA guidelines, the easiest way to do the VA loan is what we call a VA IRRRL. It's basically we take your current loan and we flip it into a new loan. We need to make those 3 payments. We just have to prove that at the time you went into the forbearance that you were current. And then the new loan, the good news is your new loan could be your current balance plus all of the interest that has accrued up to this point, plus any fees that you might have. And we can do that, and no income is needed, nor an appraisal is needed in that scenario. Okay, so VA is the simplest and easiest way to go through this process. USDA is very similar to conventional financing. If you're in a VA loan, a USDA loan, you need to complete your forbearance agreement, and then you need to make 3 monthly payments on time, 3 separate months. After you make those 3 payments, we can refinance you. Now, those 3 payments need to be made prior to us closing your loan. So we can start you on the process now. But again, once you get out of the forbearance agreement, you make 3 payments, then we can close you after that 3rd payment is made. But it has to be, again, 3 consecutive months in a row. So let's recap this. Conventional financing, to make it as simple as I can, you have to complete your forbearance agreement, make 3 monthly payments of whatever that new payment's going to be, or you're retracting back to your old payment. And then at that point, we can refinance you. FHA, we do what's called an FHA streamline. We have to pull your credit and we have to verify your income. You had to be current on your mortgage all the way up to the point of the forbearance agreement, and then we can refinance you. On a VA is the simplest way to do this. You had to been current for the last 12 months on your VA mortgage. You went into the forbearance. Now you're out of the forbearance and we can refinance you. And USDA is similar to the conventional financing where you have to complete the forbearance agreement, make 3 consecutive monthly payments, and then we can refinance you. So hopefully you find this helpful. All I ask you to do on this is please give us a call. I know it's a confusing process. Every scenario is going to be a little bit different, so I'd prefer, we talk with you directly and work with you directly with what kind of loan you have, maybe with the lender you're going through or her servicing your current loan. We can help you in all these areas. I just want to make sure you guys get the facts. So I hope you liked the video. Please don't forget to give me a thumbs up. Subscribe down below. Make sure you hit the bell so every time I post a video, you get an alert. God bless, guys. I wish you the best, but please reach out to us and so we can take you down the road to an exit strategy of this mortgage. So how do you find us? Well, that's a good point. So the easiest way to find me and my team, and you can do a lot of this online, is go to therateupdate.com. And it's going to take you to my website. You can do a few things to apply right online. You can click here. It'll take you to our mobile app. You can do it via that. You can hit the Apply Now button. This is the best way to do it as of right now because the mobile app is a brand new system that we're using. It does have a few glitches. So if I would recommend right now, don't using this click. please use the Apply Now tab. Or if you need refinancing, you can click this as well. Or get a free quote, you can click this as well. All this will take you and get you into our system so we know about you, and we'll reach out to get a hold of you as quick as we can. If you'd like to call us, you can give us a call at 844-775-LOAN. That's 844-775-5626. Or if you prefer, you can schedule a consultation right here. You can have a 15, 30, or 60-minute consultation. Just click that. It'll take you to my calendar and find opening spots for you. And if you're just like, Dan, I just won't need to email you. Can I email you some of my stuff, my mortgage statement, my forbearance agreement, anything of that such that would be able to help us help you? You can email it to me. My email address is D for Dan, Frio. So dfrio@preferredrate.com. So God bless, guys. I wish you the best. Please, I can't help you unless you help yourself and reach out to us. So I hope to hear from you soon.